for all years. Call 408-805-4653 or log on to nagarajhomes.com.
Hello, everyone, and welcome back to the Real Estate Show. I'm your host, Nagaraj Annaiah, your trusted Bay Area Realtor, bringing you expert insights to help you make real estate smarter and financial decisions. Today, I'm excited to welcome very special guest, Tony and Elder from the CPA Dude. Elder and Tony is not just a CPA; they are a wealth of knowledge when it comes to taxes, strategy, and saving money, especially for the real estate investors and business owners. Hello, Tony and Elder. Welcome to the show.
Good evening.
Yeah,
Thank you for having us.
yeah. So, listeners, if you have any questions on the taxes, any questions on the real estate, do give us a call. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. Tony and Elder, I think let's start with Tony. Tony, like, what are the tax revamps? I think I was talking to Elder recently, and Elder was telling me about within, I think, next 1 month, there's some new tax laws would be implemented, right?
July 4th is that's when they're trying to get the big beautiful bill done. We'll
Uh-huh.
see. Fingers crossed. The Senate version that just came out looked really good for depreciation and real estate.
Wow, what is that? Like, how does it look?
Yeah, so the Senate came back. They said they want to do a 100% bonus depreciation for good. So before it was phased down, you lose 20%. So right now, current law says 40% only. But with the Senate version, they want to do 100% bonus depreciation. So it is time to go shopping.
Wow, 100% means a lot of new people might be not knowing what is 100%. I think let's break it down, right? Like if somebody buys an investment property,
Yeah.
they can write off that 100% in the first year.
hmm
You,
Yeah.
Not the whole value of the property.
yeah,
So
that's what.
yeah, you have to do a cost segregation study. The cost
Uh-huh,
segregation study will divide the property into 5,
uh-huh,
15, and 30-year assets.
uh-huh.
Any asset below a 15-year useful life will get automatically bonus depreciated.
Mhm.
That's usually about 20 to 30% of the property's basis.
Yeah, let's assume you bought a 1 million property and 500K comes out as the property value, like property to build it. So basically, you can write off 300K.
Potentially up to you can always get a cost like estimate ahead of time before you even buy the property, so you know exactly how much estimated depreciation you will likely receive.
Wow. So, listeners, if you have any questions on the tax tips and you want to build on your wealth, do give us a call. This is a show where everybody needs to know how to build your real estate and how to build your wealth. Do give us a call. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. So, what else? Any other new changes will be affected, Tony? This is the biggest change.
No, that's the biggest change. And one thing I want our listeners to also hear, understand is if you're able to do this, your down payment is partially funded by the government. So if you use, let's just get amazing rental property, go find it in our garage. You're going to find the best ones for them anyways.
Mm-hmm.
Say you get a 300,000 deduction, and let's say it's you do 10% down on $1 million home,
Mm-hmm.
you only had to put $100,000 out of pocket. Now you get a $300,000 deduction on your taxes potentially. And now, say you're at the 30% rate, that's $90,000 of taxes saved. You only put out $100,000. So the $10,000 is your net out of pocket. So this is so big. Like, really, all the listeners need to just double down on the short term rental loophole, real estate professional status. And we're more than happy to explain that. The CPAdude.com, Instagram, the CPA dude, we're happy to just release all the goodies and making sure that we don't overpay the government. No one wins when you overpay the government.
Yeah, I think that's a great thing what you told. 100 up to based on the 1 million purchase, like you basically saving of up to close to 100K in 1 year. And Tony, like one more thing is like a lot of listeners might be asking is like, should they buy the property this year, or like if they bought a property already, they can qualify for this.
Yeah, they bought it already. They can still qualify for it. Like Eldar said,
Mhm.
cost segregation study. And
Mhm.
then we can use some bonus depreciation and just accelerate all the deductions for them, reduce their taxes, get a lot of money, and buy more property, build more wealth. That's the name of the game. Maybe take an okay vacation, but more so buy the property.
Yeah, I think see that's the beauty of it. Like a lot of people are upgrading from first to second property right now. All right. When they're upgrading to a second property, instead of selling their first property immediately, they can do a cost segregation study, look around it, save it, hold on for a 1 year, and then because right now the prices are going down. You know, the Bay Area almost 10 to 15% already hit by the things, right? Instead of rushing up to sell your property, do the cost segregation, do the property depreciation, hold on for a 6 months, 7 months, then maybe you can come back and sell it.
Exactly, yeah, exactly. And I mean, depreciation is recaptured, but it's only recaptured at 25%. That's the max. So
Mhm.
even if you're in the top bracket, you're still gaining that 12%. Also, just be aware you can do this with your own primary home too. Let's say you have an in-law suite or a separate basement or a garage. You can
Mhm.
convert your garage to an in-law suite, make it into a short-term rental. Let's say you have a big plot of land. Let's say you have a big backyard. You can build an ADU on your backyard and do a cost like with that. So I mean, you literally you really do have a lot of opportunities when it comes to bonus depreciation and cost segregation.
I think that's a beauty. I think a lot of people didn't knew that even if primary residence can be converted into cost segregation or like proper property depreciation. I think can we touch upon that more on that? Like basically, if you have a first primary residence and like if you are renting out maybe one portion of the property, still they can qualify for the cost segregation under the property depreciation. Let's take up a call. We have one caller. Hi, welcome to the Real Estate Show. Myself, Realtor. Your name, please.
Hi, this is Ravi.
Yeah, hi, Ravi. Thanks for calling in. Now, what's your question, please?
Yeah, hi. This I'm right now selling an investment property,
Mm-hmm.
and I have capital gains on that property.
Mm-hmm.
It's been 2 years I had that property, so I'm trying to see how I can save something on the tax capital gains of that property.
Great. So,
There
Ravi,
is an event.
yeah, so already in a contract to sell it or like you listed the property to for sale?
No, we are in a contract. Yeah.
Okay. So, Tony and Elder, how do you think they can save the taxes?
Tony, do you want to start?
Oh yeah, yeah. I'll take the layup answer. The 1031 exchange, Ravi, is your best part. So you sell this investment property. Then what you do is then you have to trade up and buy equal or more expensive property. And then that way you defer all the taxes completely. So if your gain is, $250,000, you 1031 exchange it, you don't have to pay taxes on that $250,000. So the 1031 exchange is extremely good in this instance here.
Uh, other than anything else, we can do it. Tony, is it too late for them to do the cost segregation anyhow? What else they can do it? Are there any expenses they spent on the property to make it ready? That all can be reduced, right?
So I guess Ravi, is this your primary home or investment property?
Investment.
Got you. So essentially, the gain would be your basis plus all of your renovations minus your depreciation, and then compare that to the selling cost, right? That would be the difference. So as Tony said, you could do a 1031. You could also do what they call a lazy 1031. A lazy 1031 is where you buy a property within the same calendar year. So as long as you buy another investment property by the end of the year, you can bonus depreciate that property, and then that property will, on paper, offset the gain from the original sale as well.
That's a good to know. I think lazy 1031, a lot of folks doesn't know. Lazy 1031, you can touch upon on that so that a lot of listeners can be beneficial on that, Elder.
Definitely, yeah. So this has to happen in the same calendar year. Let's say I sell a property on January 2nd and my gain is $500,000. As
Okay.
long as I buy a property by the end of the year, December 31st, put it in service,
Mhm.
I can bonus depreciate the new property. If that bonus depreciation is, say, $500,000, on paper, that would wipe out the gain from the sale that I had on January 2nd.
Got it. So, Ravi, any other follow-up questions on that?
Yeah, a few more questions, but I think I might need a detailed discussion on that.
Yeah.
So is there anybody who can help me with, one of you, or with a follow-up discussion or a call?
Yeah, so you can go to cpadue.com, set up an appointment with elder or attorney. It's a first free consultation for you. So they are very well, gives you a lot of knowledge on the taxes. Do talk to them, get an expertise advice on that.
Sure. So just one thing on that for now, right now is if I'm closing the house next week, do I need to do anything for the lazy 1031 exchange
Just
right now, or?
I think you need to set up in a 1031 account. It might cost you $1,000 or something. It shouldn't that right, Elder?
So for a 1031, a formal 1031, the money must go through an intermediary. But for a lazy 1031, you hold the money directly. So there's not much you need to do on your end currently. But if you go to join.thecpadude.com, join.thecpadude.com, you can book a call to speak with us as early as Monday.
Okay, sounds good. Then I'll set up some time on Monday. Thank you.
Thank you, Ravi, and best of luck. Listeners, myself, Realtor Nagaraj Annaiah, and I'm having a conversation with Elder and the Tony from the CPA Dude. If you have any questions on how to build your wealth, you should give us a call to our show. It's like wealth of information when we're discussing with Elder and the Tony. Our studio line numbers are 877 Bali 92, 877 Bali 92. I think that's a lot. So I think really I like the way the lazy 1031. I think a lot of people are not aware on that and they don't know because a lot of people wants their money to be used for something else, right? Like immediately. But in that cases, they give them like almost a year to think about it, what to do it.
Exactly, exactly. You know, you don't really want to rush and act fast. With a normal 1031, you have 6 months. It's quite a short period of time.
Yeah.
But if you have, you know, if you sell a property in March, you have essentially 8, 9 months to think about what you want to buy and where you want to buy it.
Yeah, and I think since you talked about this, like somebody like as we were talking earlier, also if somebody is selling their first property, okay, a lot of people are upgrading it now, right? They go to buy the second property now. I think as the Ravi was mentioning, a lot of people are selling their first property. In that case, 1031 is the only alternative, or like what else we have the other options? Like one is we talked about reducing their all the gains by showing the construction stuffs, whatever they have done, and even the commission stuffs. What else they can write offs? Any other things they can write off, Elder or Tony?
Yeah, so I mean, it really depends on what kind of property it is. If it's an investment property, you should also write off your meals, your travel, your home office, utilities, any professional fees that you pay to manage the business, things like that. But if it's a primary home, you're pretty much limited to the renovations and improvements you made while you live there.
Okay. And what are the current capital gains tax rates for selling a property in 2025? For example, 20 to 25 thresholds include a 0 to 20%, or how is the thresholds are there?
Oh yeah, it's always so you got anywhere, well, depending on the gain, anywhere from 0 to 23.8% on the federal side.
Mm-hmm.
And California, you know, you're gonna end up more so 9.3 to 13.3.
Mm-hmm.
But one thing that is really big for anyone selling a primary
Mm-hmm.
or a primary converted to a rental,
Let
that's
me
why
take this call.
oh yeah.
Yeah. Hi, welcome to the Real Estate Show. My name. Hello.
Nagaraj,
Yeah.
this is
Hi.
Ravi again. Sorry.
Yeah. Yeah, Ravi, go ahead.
I was listening and I just have a question.
Uh-huh.
So this is an investment property that I'm selling, and so the house has been vacant for a few months, and then also I have negative cash flow on the home. So is any instrument I can use to deduct from the capital gain?
Yes, of course. I think Tony, you can go for it.
Yeah, all your holding costs while you have this as long as because it's investment property, all your holding costs you're going to be able to deduct. So the interest that you're paying, the insurance, utilities to keep it all protected, the security that you have also. Of course, you don't write off the principal because that's not how taxes work, but you do write off the depreciation on the home. So that will reduce your overall taxable gain.
Okay. So, Ravi, anything else following up on any follow up on that?
Yeah, just the house is vacant like for like almost 4 months for renovation and for selling. Is that 4 months rent that I was getting before? Is that a strike deductible, or is that something that I'll have to? I cannot do anything.
Oh, the foregone rent, the missed rent,
Yes.
that is not deductible because for taxes, 99% of the time, people are cash basis taxpayers. So that means you only report income when you receive it, but you don't report losses when you didn't receive it. So because you're cash basis, you unfortunately you didn't have rent coming in, you can't take a loss on that.
But Tony, one thing is like since he owned this property for 6 months now, when he's filing for 2025, 2025 taxes, can you do a property depreciation?
He'll still take depreciation on on the months up until the sale. Yep.
Yes. So, Ravi, talk to them. I think that might be one of the ways you can go for it, depreciation. So, since you are hold on to property for this year.
Oh, that's helpful. Thank you very much. This show is really, really helpful for a
Yeah.
lot of people like us. Thank you for.
Thank you so much, Ravi, and best of luck. Listeners, if you have any questions on the real estate or a tax, do give us a call. This is the show is for you guys. Take like they think about how you can build, and because a lot of people thinks buying a real estate is a lot of problems, but no, the way you think, how you decide upon, that way go for it. Our studio line numbers are 877 Bali 92, 877 Bali 92. Myself realtor, I'm having a conversation with Elder and Tony from the CPA dude. So one more thing is like I wanted to talk to you guys is like on the other than the taxes, when somebody signs up for your things, right? Like, do you guys help them to set up in a company? Like, for somebody wants to do an LLC, S corp, as in a as a tax guy, will you help them on for filing for the organizations also?
Definitely, yeah. So we help with LLC formation, S
Mhm.
corp election. We help people get EIN numbers, draft operating agreements.
Mhm.
So we really try and be a full service firm where we can help you start your business and then help you run your business.
Okay, not only you basically help on the taxes, you on top of it, you help them to because let's take a one more call. Hi, welcome to the real estate show. My name is your name, please.
Hi, this is Saurabh.
Yeah, hi Saurabh. Thanks for calling in. Your question, please. Go ahead with your question.
Yeah, I have a question related to an investment property out of state of California,
Okay.
and what would be the tax implications if I do not sell it and move back to India and still continue to collect rents? I know we're gonna file 1040 NR, I think, but I want to understand the capital gains and when I dispose of property, or even if I'm eligible for 1031 exchange when I'm not in the United States but still holding the investment property after moving back to India.
Tony, you can take for it.
Yeah, so you have the investment property in the US, you're living in the out of the country, and then you're just curious about how the capital gains will work?
No, he was like he's thinking of going back to India.
Yeah.
What will happen for the properties? Like if he's getting any, yeah.
Oh, yeah. So because you'll have the sale in the US, you'll still be subject to capital gains rates here. So because it's sourced and you have nexus to where the property and the sale is, and if it's in California, you'll pay California taxes and federal taxes, just because you'll be taxed on worldwide income. So capital gains will still apply.
But can you do a property depreciation staying in India?
Yeah, you can still do that. Yeah.
Which
Okay.
which state is the property in?
Saurabh, which state is it in?
It's in South Carolina.
Gotcha. Yes. I mean, you essentially still have to file a non-resident South Carolina return, a non-resident U.S. return, and then pay any tax to South Carolina and the IRS if there is any. And then you can't, if you're no longer a U.S. resident or a green card holder, you cannot do a 1031. If you are a foreign person who owns U.S. property and you do sell the property, they automatically withhold, I believe, 15 or 20% on the sale of the property as well.
So do you have any questions, Saurabh, on that?
Thank you.
Yeah.
No, I think I got pretty much what I was looking for initially. Thanks a lot.
Thank you.
I'll follow up later on if I have it.
Yeah.
I appreciate it. Thank you.
Thank you so much, Saurabh. Listeners, myself, realtor Nagaraj Annaiah, and I'm talking to Tony and Elder from the CPA dude. If you have any questions, do give us a call. Our studio line numbers are 877 Bali 92. I think the elder at the last you told me very good point. Withholding of 10 to 20%. Is it like necessary to withhold, or like any investment properties, it is necessary to withhold the taxes, right? For 10 to 20%. Is there any way we can avoid that?
So that requirement is only for foreign nationals that own US real estate.
No, because recently one of my client is a citizen here, but he still was able in California. He sold investment property. Okay,
Oh, yeah.
and being an investment property, they withhold like for I think close to a 10% for the California.
Yeah, so California, federal, they'll let you go.
Mhm,
California, they want all their tax money. So
mhm,
it'll be Form 593 whenever you sell an investment property. And
mhm,
how you fill that out is how much they withhold. So
okay,
if you're smart and when you use, like for us, we always know we will make that form where they don't withhold anything. So that means our clients have more buying power to go do a lazy 1031. But if your CPA doesn't know what they're doing, they're going to withhold 3.33, 9.33, and then you're just gone 10%, 3% of your money. You have
mhm.
way less buying power for your next property. So the 593 form, it just needs to be very strategically filled out. Otherwise, you're going to be giving money to the government right away. But if you do and plan it properly, you don't have to do that.
No, I think that's all comes down to talking to the expert, right? Like if you don't talk to the expert, then you basically you make this all kind of decisions, and you think about you're not making enough wealth or saving your taxes, right? Talking to the experts always, like talking to the right real estate team, and even to the tax guys when you're selling, it makes a lot of difference. I think that's what I educate a lot of my clients. What is the net value are you getting it? You might sell 2%, 3% lesser than the other properties, but if your net value, like saving this way, you can always recover your money. So
Definitely.
that's where the smartness comes, listeners. Like always having in a team who can help you out, that makes a difference when you're buying or selling the real estate. Tony or Elder, like since we have a couple of minutes to go, if somebody wants to talk to you, what's the best way to set up an appointment with you? Uh, please go for it.
Oh yeah,
Tony.
the best way would just be, as Eldar said, join.thecpadude.com. That's
Mhm.
the best way to book a call. So join.thecpadude.com. That's the easiest one. If you don't remember that, Instagram, the CPA Dude, we will get you there for sure too. But anything you find us in, the CPA Dude. And then if you like to call, 254 CPA Dude. Once again, 254 CPA Dude. But if you want the fastest, quickest way to talk to us, an advisor, free consultation just for the listeners here, join.thecpadude.com.
And one more question to you guys, like, is a lot of people wants to talk to you itself, right? Like they want to set up an appointment. Is there an availability where they can select the tax consultant, you or the elder?
So no, we're pretty much on a first come first serve basis, but all of
Mhm.
our tax consultants are trained by us and they do meet with us regularly. We also review all the tax planning that occurs in the background. So a discovery call would not be done by Tony or I, but the
Mhm.
tax planning would be reviewed and likely delivered by one of us.
Okay. Liz, thank you so much, both of you listeners. If you have any questions on the real estate and would like to know, a lot of people are buying or selling, and see, if you don't know the experts like this, the what are the decisions you make are not right then, right? So if you have any questions on real estate or on the taxes or anything on the immigration also, do like I have a lot of team who can which can help you out. Easy to set up with me. Go to nagarajhomes.com, click on a WhatsApp icon. That's how you can click talk to me. I have a couple of listings coming in San Jose, Fremont, Dublin. If you would like to know more about the listings also, do reach out to me. So thank you both of you. Have a wonderful evening, listeners.
Thank you, Nagaraj. Bye bye.
We are with you wherever you go.